Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, June 26th, and we're going to talk really quick about Pfizer and a trade setup that happened last night that played out beautifully today. And that was a short. And if you follow me on StockTwits and Twitter, which if you do not, make sure you go ahead and do that. The handle is @TradesWithTom. But if you follow me on there, you got the signal yesterday afternoon. We were able to take advantage of it today. And you also know when we hit targets, because we had shorts and we hit targets. Sent out the message this morning at 9:51 a.m. The targets were hit. Right, this was right around 43.13 or so this morning. So with that being said, why were we bearish Pfizer and why do we expect the down move today? And before I go into detail on this, make sure you hit that subscribe button and hit that like button if you're enjoying the content here with Basecamp Trading. So with that being said, Pfizer, what we were looking at yesterday is the main thing we've been watching is this 43.79 resistance here, where we've tagged it three other times previously. And we keep breaking above it this week. We broke above last week and pulled back and closed below. Broke above, pulled back, closed below. Broke above, pulled back, and closed below. And that tells us over and over and over again that there's an unwillingness for this market to rally beyond that resistance. Then yesterday we had just a beautiful textbook shooting star candle with a very nice long topping tail, closed right at the low of the range. I mean, just perfect. And that combined with the around the stops, which is where we're breaking through resistance and pulling back and closing the opposite direction, tells us, okay, this market should turn and head lower. So that's why we expected, all right, Pfizer should head lower today specifically. And it ended up playing out really well. The way I ended up playing it personally was I had purchased shorts, or I purchased puts in Pfizer with the 43 strike. I ended up closing those this morning for a pretty decent gain, but worked out really well. So keep an eye out for this. Again, this is the same type of pattern we talk about with futures as well, where we have that false breakout, where we have the run and stops, where it breaks through support resistance and then turns and goes the other direction. Now, that paired with the shooting star makes for a really good setup. The same thing is happening here in gold, however. We had a shooting star yesterday. We expected gold to head lower today, which it has. But if you look at our weeklies, this is where it gets interesting. We're breaking through resistance, pulling back and closing below. Now there's still 2 days left in the week, but watch, if we close with this really long topping tail and we have closed below that 14.17 level, then we should see gold come down next week as well. Also, gold's really extended. In full disclosure, I already have puts in GLD that I'm holding on to right now. I bought some yesterday, covered those today for a 40-some% profit. And then I rebought again when gold bounced. So now I'm holding on to those puts for a bigger move through the week. So that's it for today, though. Keep an eye on gold. Great job for those who traded Pfizer. Make sure you follow me on Twitter and StockTwits. And until next time, everybody, happy trading.